In Chapter 4, we'll be going through some of the deductions for AGI, and they have the word "for" italicized because of its importance, which I'll talk about in a minute. So I'll be going through just some of the PowerPoint slides for this chapter. I recommend that you review all of the slides as well as read the chapter. But I wanted to mention some of the more salient, I think, and important concepts in Chapter 4. First of all, what we mean by adjustments for AGI is that these adjustments actually help determine the amount of your adjusted gross income, as well as income that you report and other things. And so these deductions are important because, as I mentioned, they will determine to some extent the amount of your adjusted gross income, which is an important number in individual taxation, because that AGI number will impact whether or not the taxpayer qualifies for subsequent itemized deductions as well as certain credits. So we want the AGI number to be as low as possible, and what we'll be talking about in this chapter are some of those deductions that help to reduce adjusted gross income. First thing we'll talk about is student loan interest. This is interest paid on loans that the taxpayer incurs, and these loans are related, of course, and finance qualified educational expenses, but this deduction is limited to $2,500 per year. So what qualified expenses generally, what would qualify? Generally, the kind of qualified expenses would be tuition and books and fees. And the course of study could be either at the undergraduate level or the graduate level. There are limits on who qualifies to take the student loan interest deduction for AGI, and it begins to be phased out for taxpayers who reach certain income thresholds. And so, for example, married taxpayers filing joint, the modified adjusted gross income, which is your adjusted gross income modified for or adjusted for certain items, less the $135,000, and then divide that into the range of $30,000. And so that is to say that when modified adjusted gross income exceeds $135,000, for the next $30,000 of income of modified AGI, the taxpayer qualifies for less and less student loan interest deduction, until eventually, after $165,000 for married AGI filers, the deduction for student loan interest is no longer available. Another important deduction for AGI is a health savings account, deduction. The health savings account deduction, or the HSA, is a tax-exempt savings account for qualified medical expenses such as premiums paid on this high deductible health coverage and certain other medical expenses. Folks who are married or have children or spouses would qualify as well under the HSA. So the HSA, as I kind of began to speak about it a few minutes ago, is the high deductible health plans. And so these are special plans that are available for folks usually who don't have health insurance and don't want to pay for traditional, more expensive coverage. So they might get what they might call a bronze level or a high deductible health care plan, which are less expensive, but because the deductibles are so high, this major medical coverage can be expensive in the event that someone incurs significant medical costs. So if someone, for example, qualifies for a health insurance at their employer's regular health insurance, then even if they turn down the health insurance, they may not take this deduction. This is generally only for people that either their employer doesn't provide subsidized health care, and by subsidized I mean the employer doesn't pay for all or part of the premium, or the employer provides no coverage, or the person perhaps is self-employed or unemployed and doesn't have health care coverage. Then if they buy into one of these high deductible, less expensive plans, then they qualify for this health savings account deduction. And the limits are presented on the screen here. been a big change this year in moving expenses. In years past, if someone left a job and worked at a distance away from where their previous job was, more than 50 miles greater than the distance between their former residence and their former employer, then they would qualify for a moving expense deduction. That's been eliminated as a result of the Tax Cut and Jobs Act of 2017. Now only the military personnel are eligible to take the moving expense deduction, and this deduction must be the result of an order generally received by a higher command in the armed forces, where the move is not voluntary but is a requirement. Another deduction for AGI, again these are very important for the reasons I mentioned, are for self-employed persons. And so a self-employed person does not have an employer withholding Social Security and Medicare, for example. And so as a self-employed person, the self-employed person is required to pay both halves of the FICA insurance, and that includes Social Security and Medicare. Well, half of that is paid as in the role of being an employer, and half is paid as in the role of being an employee. Well, the role of the employer as of a self-employed individual is deductible. That is to say, those costs related to self-employment for FICA are deductible. As a business expense, the same way if you worked at a job, your employer can deduct the half of Social Security and Medicare that they pay on your behalf as a legitimate business expense. And the total deduction then would be 7.65%, and that includes 6.2% for Social Security and 1.45% for Medicare. As far as health insurance for the self-employed, self-employed individuals may be able to deduct 100% of self-employed health insurance premiums. So, for example, if a self-employed individual takes out health insurance, a regular health insurance policy, then subject to certain limitations, that is an expense that is deductible for AGI. However, a couple of limitations apply. One is that the taxpayers cannot take deduction for the amount in more than their net earnings, and that makes sense. The other one, of course, relates to the fact that if an employee or this self-employed person, I should say, has access to other health coverage, either through another job they may have or through their spouse's employer, then they lose this, even if they don't take or participate in the other person's health insurance. If they have an opportunity to participate in a employer subsidized health insurance plan, then they may not take this deduction. And this eligibility is determined on a monthly basis. So if a self-employed individual had access to healthcare coverage through their spouse's employment for maybe half the year, then the first half of the year when they didn't have access to healthcare coverage, they could take this self-employed health insurance deduction. But once, maybe in July 1st, for example, once they become eligible to participate in a healthcare coverage that's subsidized by an employer, then they may no longer take this deduction for that part of the year. Another deduction for AGI is the penalty on early withdrawals of savings, or if you have a CD account. So if you're penalized for withdrawing money early on a CD, for example, that is a deduction on your federal tax return for AGI and reduces your AGI. And this amount will be reported by your financial institution when they report interest that you've earned on Form 1099 INT. As far as alimony is concerned, we'll pick that up on the next video and finish the rest of the concepts that I wanted to talk about in Chapter 4.